Hello and welcome once again to the February MENA market briefing. As we speak, global oil prices continue their relentless march towards $100 a barrel, but that price milestone is by no means a foregone conclusion. US and Iran nuclear talks are in their 9th round and getting to the business end of negotiations, which could result in sanctions relief and allow Iran to increase its oil exports. Today, I'm joined by our lead analyst, Sudharsan Sarathy, and we're going to discuss Iran's path back to market. Stay with us. So, bulls remain firmly in control of price action at the moment. Fundamentals, they remain tight, and there is still no sign of the long-awaited and overdue surplus that many energy agencies have baked into their forecasts. A bearish thesis for crude oil is hard to concoct in today's market. A slowdown in Chinese economic growth, global inflationary pressures and demand elasticity are potential anchors for demand recovery, which the market seems quite happy to overlook at this point. Meanwhile, OPEC remains steadfast in its production policy. That is unchanged again in February, and I believe the meeting was concluded in record time, around 14 minutes. The only foreseeable short-term bearish factor is in fact the return of Iranian barrels. And traders are now being forced to seriously contemplate the political risk surrounding the nuclear negotiations, and that has prompted the market to pause for breath over the past week. So here we have a timeline of key events that have largely dictated the Iranian oil trade since 2015. To summarize the situation, these talks aren't actually about oil, but rather about Iran's civil and defense nuclear capabilities. So the US has imposed economic sanctions to penalize and inhibit nuclear weapons development by Iran, and this in turn limits the national oil company, NIOC, from trading oil on the international market. As of today, so February 11th, international diplomats are brokering indirect talks between the US and Iran, which could see the reinstatement of the JCPOA, which was signed back in 2015. Now, if a deal is reached, sanctions relief is very likely to follow, at which point Iran can resume supplying oil to the international market. If a deal is not reached, however, the US may even tighten the screw on Iran, which would further curtail crude oil supply to the global market. What we have essentially is a strong potential for a price catalyst and a move in either direction at this point. So this chart plots news buzz around the Iranian sanctions, and I'm going to let Sudharsan take over from here because he's the one that is responsible for it. So can you just give a little bit more detail on this, please, buddy?
Thank you, Tim. So the chart that we see here is the social media and news activities surrounding, people talking about sanctions, be it in reports or on social media tweets, etc. The dark blue line is a 15-day average of the buzz score and buzz score on sanctions, and the lighter blue is on the 30-day average. So whenever we see the dark blue line cutting above the light blue line, there has been a spike in people talking about sanctions, or there's been a lot more renewed interest on the topic. The maximum peak that we see here happened sometime in April 2021, which is when the talks actually started resuming in Vienna last year. And then in June of last year, there was a dip post-June because there was hardly any action happening after the Iran president election. So we see from July onwards till about September or like even to October, you can see the scores falling to practically zero because there was absolutely no talk on the sanctions bit. And now again, we've seen slowly the scores start to go up. In between, there was concern about the slow progress of the talks, etc. The most recent activity or the headline news driver has been US considering a few waivers to Iran as a means of incentivizing the deal to happen. And the comments from the Iranian party that they want complete removal of sanctions and that there is a lack of political will in the US, etc. So we've again seen activity start to come back with respect to sanctions. People are talking more about it. So there's a lot more curiosity as to what would happen. So that's what this chart is about.
Yeah, definitely. Yes, definitely caused a pause for breath and had to take in when I saw that headline about sanctions waiver. I read that one myself a few times just to be sure I hadn't missed the big breaking news there. But yeah, we definitely seem to be in the end game for it now. And there's, as we might expect, a lot of political brinksmanship going on in the air. So here we've pulled out a few quotes from officials who are in fact party to negotiations, and talks are clearly now in a critical stage. But based on these quotes and these snapshots, the result could actually still go either way. It seems that the US is putting pressure on stakeholders, or particularly Iran, to secure a deal this month. But I don't believe there's a hard and fast deadline to that. And obviously we're in round 9. Those talks are underway. I think they should conclude today, but there are still some major sticking points and hurdles to overcome. One of those sticking points is how and when sanctions will be repealed. That's like what order and in what time frame. And that remains a critical question for the return of Iranian barrels and oil prices over the course of 2022. Again, this was actually a factor of discussion for one of these podcasts in the middle of last year. So we're still waiting, and timing is the critical issue as we discussed then. And obviously that will largely dictate the timing of crude exports from Iran. And another key factor that we will discuss now is not necessarily the timing, but how much production they can actually increase by, and how quickly they can bring it back. We've got some data, Sudharsan, you're going to share that with us now. And this comes from some of our existing oil reports that we put out on a weekly basis.
I think it's an important fact to discuss. So the chart that we see here, just as a caveat, is all data considering the period when the sanctions were briefly lifted or when the wind down period was allowed for companies to continue buying from existing contracts before they had to completely stop and respect the sanctions. So the reason we've put this chart out is to give a perspective of how the exports were when there was no sanctions. So ideally, this could be a reflective period of what is likely to happen in the future if sanctions were to be removed. So we could see that the crude oil exports ranged anywhere between 2 to 2.5 million barrels per day. And if we add condensate on top of it, the number could go up to as high as 3 million barrels per day. That's how it has been in the past. If you look at the current production numbers, depending on the Reuters OPEC survey, the Iranian production estimates are anywhere between 2.4 to 2.5 million barrels per day of oil. So from these two data points, you can clearly see that there is ample scope for supply to increase as soon as the sanctions are lifted. Now the question is when. So while we may not have an exact date on when the sanctions would be lifted, we can fairly say that Iran has been priming itself to be ready for making the best use of opportunity as and when sanctions are lifted. There has been buzz about activity on improving the export infrastructure and keeping things ready. So in all likelihood, as soon as the sanctions are lifted within the next couple of months or so, the exports could start to increase sharply. But I bring a perspective from a buyer's side. Last year, when the sanctions seemed, the talks on the sanctions lifting seemed to be pretty active, there were talks from PAJ, Japan. Japan used to be a key consumer of oil from Iran. They mentioned that they would need at least 3 to 4 months after the sanctions are lifted for them to change their crude sourcing patterns. Similar observation was made by Indian refiners who welcomed any lifting of the sanctions because that would make more supply available, but they also felt they would need some time to adjust to sourcing oil from Iran. So that, I think, would be a consumer's perspective. So even if the sanctions get lifted, because the crude sourcing happens a few months in advance, the consumers will need time to adapt to the availability of this oil. On the right side, we see the destinations of Iranian crude and condensate. China has historically been a key buyer, even with the exports that we see as of today. Most of the volumes end up going to China. India used to be the next biggest buyer, but they've not been buying anything due to the sanctions right now. But whenever the sanctions get lifted, India would be actively looking to buy back some oil from Iran. So that's it on the crude side. On the condensate, South Korea has been a key buyer, and they would be looking actively to get more oil, more condensate from Iran. So that's on the export side. If we go to the next slide, we can also look at who will face competition when Iran starts to export oil. So this chart shows the API and sulfur of different crude oils that get exported from the OPEC countries and from Middle East and North Africa. So we can see two clusters developed here. One on the far right on the bottom, that's between Basra heavy and some of the very heavy Iranian grades. And in the middle, we also see the biggest cluster there. That's between Basra light, Basra medium, and the Iran light, Iran heavy. So clearly, there will be a big competition for Iraq. Iraq has stopped exports of the Basra light grain, and now it's only Basra medium and Basra heavy that's being exported. So there is a shortage in terms of the medium and heavy crude, at least for the Asian refiners. We've also seen Mexico recently announcing that they will reduce their exports to India. They're going to focus more on their domestic market. So clearly there is going to be a shortage for the heavy barrels, and the entry of Iran will be very welcome because it can create some competition for the Iraqi barrels. That will be interesting to watch to see how both Iran and Iraq will start pricing their barrels to kind of maintain market share, or in the case of Iran, to gain market share. Yeah, on to you, Tim.
Okay, right. Yeah, I think if we shift away from the physical pivot back towards the paper markets, here we have some price forecasts, we have the futures curves, and we have some supply-demand balances for the year ahead. And the question is, I suppose at this point, are Iranian barrels being priced in? And there are many viewpoints on this, no doubt. On the consensus price forecast, that's the data on the left-hand charts, I think the first thing to note is that the first and second quarter average price estimates are actually about $7 higher than they were a month ago. So a lot of us analysts are playing catch up with the realities of the physical market today and trying to keep pace with the bullishness in the futures prices as well. And I think this reflects the pervasive bullish sentiment in the market. And also perhaps the fact that the analyst community as a whole are underestimating growth and overestimating supply increases. And that's actually been the subject of recent podcasts and episodes. The second point, again, on these consensus forecasts is, and in respect to pricing in the Iran risk, is that prices do soften into the second half of the year and into 2023. But the question is that pricing in the return of Iranian barrels at this point? We're talking around 0.5 to 1 million barrels per day of potential additional production coming from Iran in the event of a sanctions waiver. And therefore, you can see from the bottom chart on the right there how this might implicate global balances. So this is the data from the EIA, and you can see already that through Q2 and into the second half of the year, the agency foresees the market moving into quite a significant supply surplus through that period. And as far as I can tell at this point, this doesn't actually factor in the return of Iranian barrels, at least not in the base case. And there's no mention of it in the recent monthly report for February. So if we were to then add a 0.5 or a 1 million barrel per day additional supply to the market, you start to see those surpluses, let's say for argument's sake, in August, moving from a 1.4 million barrel per day to 2.5 million barrel per day surplus. So that in effect could have some serious price implications. And judging by the charts and the forward curve and the crude futures chart there, the backwardation for that time period isn't particularly steep, and therefore, to my mind, not necessarily pricing in or effectively pricing in the risk that we might see from a deal that could emanate from talks today or in the near future. Sudharsan, you know, you've got your own opinion. What do you make of it? How do you think the market is pricing the Iran risk at the moment?
I think people are a little bit cautious now. Like I think aptly titled the recording this time. I think there is a pause right now where people want to kind of look at what's the actual outcome. I mean, there can be a few improvements in the talks. We've seen this from last year again. There was a lot of buzz about the sanctions being lifted and the talks being progressing. When we put out our recording last year, again, we said that, you know, we would like to wait and watch. We are not going to be overly optimistic. We will maintain the same stance this time on too. We'll wait for the actual sanctions to be lifted. I think that's what the market is also looking for, because even the recent announcements from the Iranian side has been like, they're clear they want the sanctions to be lifted before the talks can like happen. So yeah, it's a wait and watch.
Yeah, absolutely. And I think as well, just on a sentiment note rather, that I don't think there's as much bullishness around the negotiations today as there was back in June. But you know, the results remain to be seen, and we'll react accordingly, and we'll keep on top of the oil flows. And if you want to do so, you're welcome to follow our reports. You know, we're keeping abreast of developments and exports volumes from Iran in our weekly reports, that Sudharsan puts out. So I do recommend subscribing to those. Also, we just recently started publishing a weekly chart book, which consolidates data analysis across the barrel. And we'll put a link to that in the comments section for this video. So do be sure to subscribe to that if you're not already. And we'll be putting out another edition of this podcast again in March. So join us again for that.